Well, hey everyone, thanks for joining us today for Starting Accounting the Right Way. It's part of our Summer of Accounting web series. And today's session is all about helping your church start with a stronger accounting foundation, keep better records, and avoid extra cleanup down the road. And we'll also go into if things are getting a little complicated and you're taking over a system that might just be better to start over, and when that actually makes sense to do. But yeah, Thomas will be going through all this with us. But we're also I want to let you know about our next session next month, which is bank reconciliation. So it'll be a clear process for closing the month, and that's on Tuesday, July 21st. But yeah, we'll be sending over. I'll post in the chat a link for y'all to go ahead and register for that. But I'll turn it over to you, Thomas. Thanks.
All right. Hi, everybody. This is Thomas from PowerChurch Tech Support. And today we're talking about a topic near and dear to my heart, which is restarting accounting, or if you're just getting started on PowerChurch, starting it for the first time, which is really just about the same thing. And so we're going to be covering like the specific nuts and bolts details of this. By the end of this, we'll be going through on screen doing all of this. But first, the next stop is to get set up about what it is we're doing and what information you need to gather first. And so first off, just a quick talk about what we are trying to do here. Like, if you're starting accounting, what is our real goal in having the accounting going? That a good set of books for your church tracks the balance of every bank account the church has. Every real life account you get a statement for, you can run a balance sheet, see how much is in it. On the flip side of that, how much you owe at any given time on taxes or your mortgage or any other liability the church has. How much you have for restricted balances. That's things like a building fund or a missions fund or a women's ministry that people donate to in particular, and you, the church, you have to keep track of those balances and make sure that the building fund donations get spent on the building and so on. You need to know how much of that money is lying around. And then once you're up and running, you'll be entering in every outgoing check the church writes, every other payment the church makes, online payments, everything that leaves the bank account, all the incoming deposits, contributions, and otherwise. And then the real punchline at the end of all of this, which we're not going to get all the way to on this call, but the real goal of doing the books is at the end of every month, you want to be able to reconcile your bank statement and say for absolute certain that you are on track and you know all the stuff that's happening in real life and your books match reality. So right now, if you're watching this, you probably are either just now getting started on PowerChurch Accounting, or you've taken over PowerChurch Accounting and you're wondering, should I just restart this? Should I, like the man said, should I just cut the ends off, start from scratch? That a sign you should restart. So if in general you're doing the books but it doesn't match up, like especially if you run a balance sheet that doesn't match reality, or even worse, if you're just avoiding running a balance sheet because you know everything on there is not right, that's always a bad sign. Likewise, if you're unable to do a bank reconciliation just because there's just an overwhelming pile of old junk on there, and just in general, if your accounting reports are not meeting the church's needs, like, because your job as a bookkeeper is to be able to, aside from lots of other things, your job as a bookkeeper is to be able to answer questions that people come to you with. If the person in charge of the deacons comes up to you and says, hey, how much have the deacons spent this month? You got to be able to pull that out. Someone who's running the building fund says, hey, how much money do we have left over in the building fund? Got to be able to pull that out. And if in general your accounting is not doing this, and especially if you're just really frustrated with it and it's not been good for a long time, restarting might well be the right thing. If it's more important to keep the history, there's lots of things we can do to rehabilitate an existing bookkeeping system, but it's like renovating a historical house. Every different one is different. You'll have to give us a call at tech support. We'll figure out what to do. But restarting accounting, that's the same every time because we're getting down to a nice, ordinary starting point for everybody. Okay, so say you've decided you want to do this. You're using PowerChurch to do your books, and you're either starting from scratch or you're cutting loose the old history and starting a new one. We're gonna restart accounting. If you do wind up restarting, it wipes out just the stuff under the accounting section of PowerChurch. If you're worried about restarting accounting, be aware it just touches the accounting history. It wipes out all the checks you've written, wipes out all your balances, wipes out your chart of accounts, but it keeps your membership and it keeps your contributions. All the donations people have made, all that stuff remains. That it's just affecting the stuff from the accounting heading at the top. Accounts payable, fund accounting, payroll, and so on. All right. So if you're doing this, here is the real fun part. And if y'all have ever been on a tech support call with me on this topic, you've had this spiel from me. This is the standard list of things, information you need to gather before starting your accounting. If you're going to be starting your accounting, we need to know all this stuff to hit the ground running. And it's super helpful to just have it in a pile ready to go, as opposed to be looking around for it while you're going through and doing it. And these things here, they're in the same order that they're going to be going through on screen. Like I know this is just words on screen right now. We're going to be putting all this stuff into PowerChurch right in front of you in just a few minutes. But first, we're going to gather our information. First off, when are we starting? You can start as of the beginning of any month you want. You can start as of the beginning of June, start as the beginning of March, as of whenever you'd like. The most common thing is the beginning of the year. There's a trade-off to be made here. The further back you go, the longer you have good accounting reports for once you're caught up, but the longer you have to go to catch up. If you're starting your accounting today and you're going back as far as January, you're signing up to enter in 6 months of checks and so on before you're all caught up. Whereas if you just start at the beginning of June, you could be caught up after entering just a relative handful of things, but you wouldn't have good reports for the spring. So it's a trade-off on that one. But for all of our examples, we're going to be starting as of the beginning of the year. And then we need to do a good inventory of all of the real-life bank accounts the church owns. There's certainly at least one general checking account that you pay your electric bill out of and whatnot. But if you have any other things like that, a separate thing for some particular fund, a separate reserve fund, a savings account, a money market, a CD the church bought, anything that you get a statement from a bank about, we need to know about here. And that even goes for things where some area, like where it's partially independent. Like I talk to churches fairly often who have like a deacons fund or a women's ministry or something, where really that group of people are managing their own money and have their own bank account. You still need to have it. That even if you, the church bookkeeper, aren't making the decisions about that bank account, if the church owns it, you got to know what's happening with it. That's part of this. Even if it's the deacon's bank account and you don't get to decide about it, we need to know how much money they've got in there, because it's really the church's money. And so for every different thing, every individual account that you get a real life bank statement from, we need to know a set of information about it. We need a closing balance as of the end of December 2025, for our example. Just right off the bank statement itself is fine. And then we need a list of outstanding items. That is to say, we need to know which pieces of 2025 business didn't make it onto a 2025 bank statement. Like, as the year turns over, which things are outstanding, like which checks did you write in late 2025 that didn't clear until 2026, or maybe even haven't cleared yet. This is super important, and it's one of the trickier things to come up with, especially if you haven't been doing good bookkeeping. There might not be a good check register that you can use to figure out which checks have cleared or not. This is one where you've got to do your homework on it. That if you have a checkbook that you're writing out of, look through your bank statements and figure out, based on the sequence of checks, which ones haven't cleared, and figure out which ones those are. That this is super important, figuring out a good list of outstanding items. Like a typical list of outstanding items for, say, December 2025 would be like you'd have a handful of checks written in December with dates in December and so on. And then maybe you'd have one outstanding deposit. Like if the last Sunday's worth of deposits didn't make it to the bank until the January bank statement, that would be an outstanding item as well. And you need to know how much that was. But that's the first thing, and it is probably the most important, is for every real life bank account the church has, we need a balance from the statement, and we need a list of any outstanding items. Mostly just your checking accounts will have outstanding items. Savings accounts and so on, just only boring things happen to them, and so they'll just have a balance. All right, so that's the first thing, is bank accounts. Next up is liabilities. What does the church owe money on? Some of that stuff is straightforward, like, does the church have a mortgage? If you owe money on the mortgage, you need to know how much you owe, what the principal of that is as of the beginning of the year. Likewise for a car note. The other liability that almost every church has is tax liability, which is just for payroll taxes, because that's really the only kind that you're normally subject to. That if you're withholding money from any people's paychecks, you would need to know how much money you owe the federal and state government as of the beginning of the year. That's usually pretty easy because, like, say if you were doing this, say, as of the beginning of January, well, right now it's June. That money was paid. And so sometime back in mid-January, you paid off the federal government however much you owed. The amount of that payment would be the amount of your starting tax liability for the year. And I can cover that in more detail if you're interested later. But that's the main thing we need to know is, as of the beginning of the year, what does the church owe money on? How much do you owe in very straightforward debt type things like a mortgage or a car loan? And how much is the running total that you owe to the federal government that you've withheld and matched from paychecks? The other kind of liability that you might have is a credit card. If the church has a credit card, we need to know, again, as of the beginning of the year or the beginning of whenever we're doing it, we need to know how much you owe on the card as of that particular time. And if you pay off the card every month, it might be zero. But even if you pay off the card every month, it might not be. Like, say you'd paid off your last bill in late December, but then on December 31st, you'd use the card. Well, then you owe that money as the year turns over, even though you're up to date on your credit card. And so liabilities are sometimes tricky because they're on a rolling basis. Like, you always owe some money on your card or on your taxes, but you need to know as of the beginning of the year, what do you owe? What do you owe on your credit card? What do you owe the federal government? What do you owe on your car loan? And then next, after assets and liabilities, it asks about restricted money. It asks what restricted funds you have, and actually it shows you all of your different contribution funds. So over on that side of the program, and we're going to go over this on screen as well, but over on that side of the program, there's the list of things people donate to, like tithes and offerings and building and missions and all that sort of stuff. And it's going to show you a list of all those, and it's going to ask basically which of those are restricted money that is earmarked for something in particular, like a building or missions fund. And you'd need to know which of those are restricted, which is usually easy enough. You can just tell by looking. If it's got the name of something on it, then the donors mean for it to be restricted for that thing. And you need to know how much money was left over for it. If you keep a missions fund, it might have been that money all got spent out by the end of the year and the missions fund starts at zero, or it might be you brought in a bunch of missions donations in late 2025 and the missions fund starts the year with a lot of money in it. This part especially is very important because people are depending on that money. Like, especially, you don't want to start off your accounting on the wrong foot where you accidentally steal $800 that the youth group raised in a bake sale. You want to make sure that you go around and ask the people in charge of these restricted funds, like, how much of this money, how much restricted money given to you by the donors do you still have lying around as of the start of the year? And they might have good records you can rely on, or at the very least, they'll have a starting point. But yeah, it's very important when you're putting in the starting balances for different restricted monies that you know how much that is, so that you're not pulling the rug out from under people who meant to be donating to something in particular. And then one last thing, which is optional and really happens after the setup process itself, is, does the church keep a budget? If the church plans, we're going to budget X dollars per month or X dollars per year to pay the pastor, to pay the electric bill, to buy this and that and the other thing. If the church keeps a budget, it's good to know what sorts of things they budget on and what those budgets are, that there's a place to put that into PowerChurch. That's optional, but it's nice, especially churches rely on budgets a lot. And so this is the whole spiel. This is the information you need to have handy in order to get your accounting off on the right foot. And that's it. There really is nothing that's not on this page. We need to pick when we're starting. We need to know real life bank accounts, checking and savings and money markets and CDs. We need to know any loans the church has or any credit cards the church has and how much you owe on them. And if people donate money to something in particular, which almost every church has this, if you have like a building fund or a missions fund or a women's ministry or anything that people write in the memo field of a donation check, we need to know how much of that specific money is still lying around as of the beginning of the year. And if your church keeps a budget, get a copy of the budget. We'll need that. All right. And so then, things you should do before restarting accounting. One of them is just super practical. Restarting accounting is a destructive process. When you restart accounting, it deletes all of the stuff that was in your old accounting, which is probably good because your old accounting was lousy, which is why you're restarting it anyway. But it's always handy to be able to go back and see how things were before. So you'd always, before you restart accounting, make a backup first so you can go back in time and see how things were before. You might never need to, always better to be able to. Second up is fix up your contribution funds. We were talking about that before, your tithes, offerings, building missions, and so on. If those are misspelled or inconsistent or incomplete, we get those fixed up first before we restart accounting. Then you gather all that information that we talked about on the previous slide, and then you actually do the thing. That's you go to File and then Preferences and then Accounting Setup. And there's a button to restart accounting. It pops up a whole spiel about it. That's just the same thing we talked about already, but that's how you actually go about doing it. You'd make a backup, fix up your contribution funds, hit the button to restart. We're almost at the fun part. I know this is pretty dry so far. And so then we're going to go through the actual accounting setup process, where I won't go through all this in detail because it really is just the same information you gathered a slide ago, and we're going to be putting it in order into PowerChurch. All right, I'm going to flip back a couple of slides here just to the really important one here. And these will also be made available to y'all afterwards to download. But this is the most important thing. If you can get this particular set of ducks in order, you have done everything you need to get your accounting started right. That even if you don't know how to do the books in PowerChurch, if you have all this information handy and call us and say, hey, I want to restart my accounting, we'll be thrilled. It'll be the easiest accounting restart we've done. Getting all this information handy is the most important thing for you to do. And then once you've got it, we're going to actually do the thing. And so I'm going to flip over, and on screen in PowerChurch, I'm going to show you the PowerChurch demo, which has some toy information in it. And we're going to play with it and set up the accounting in it. Yep, and I see a question in the Q&A asking about should things like accounts with services like PayPal or Venmo be included in there? And the answer is yes. So PayPal in particular, there's two ways people interact with PayPal. One is it's just like a front end. You hook it up to your credit card or your bank account. You pay through that. Nothing special. But especially if you're receiving donations or selling things online, you might have a PayPal account, which behaves like a bank account in that PayPal has your money and they'll tell you how much. But it's not strictly speaking a bank account in that you have no legal protections like you would in a bank. But if you've got that kind of situation where you have a couple $100 in your PayPal account at any given time, set up your PayPal account in the asset section like it's very much like it's a checking account. And so you can track how much is going in and going out and when you cash it out and so on. That's for some people will need that if you keep a balance in your PayPal account. If the money just comes in through PayPal and hits your bank account without that middle step, then you don't need to bother setting up an asset for PayPal, just the real life banks. All right. All right, time to bring up the PowerChurch demo. Very exciting. All right, so this is a nice PowerChurch here that has some toy information entered in. It's got some members. It's got some contributions. And the first thing we're going to do is we're going to set up our contribution funds the way we want, because that's really the first piece of preparatory thing. Oh, actually, I'm going to make a backup first, just because my slide said to do that. Not allowed to do that in the demo, but if you were doing it for real, you'd go to Utilities, Backup, and Restore, and click through that process, have it make a backup to your documents or somewhere, just for safekeeping. If you have any trouble with that, give us a call. It's absolutely something we can help with at tech support. But the first real thing is setting up your contribution fund. So that's here, contributions down to setup near the bottom, and then maintain list of contribution funds. And so this screen here, you can pop out the sidebar. It shows you a list of all the different things that people donate to. Like we see here in this fictional church here, they have a missions fund, a Mexico missions fund, a building fund, a memorial fund, and they support a couple of particular missions or missionary groups that I've just given fictional names here. Say there was something else that people donated to. Say there were a youth fund, right? I'm just going to set up item number 600. It'll call it youth fund. And now if people are giving you checks that say youth fund in the memo field, you'd book them to contribution fund 600 here. I just made up a number. These numbers do not matter. They can have between 1 and 5 digits. The only reason these are in any particular order is that the numerical order they're in here is the order they'll be in on people's contribution statements. And so you put the tithes type stuff at the top and the less used stuff at the bottom, but it doesn't really matter. You just need to give each thing a number. And so right now we've got actually a pretty good looking list of contribution funds. This church here combines tithes and offerings together. If your church likes to separate those, you might have 100 for tithes and 101 for offerings. But the general rule here is you should have a contribution fund set up for each thing that is separate enough that people are going to want to see it separately on their statement at the end of the year. That the main goal here, and we get to it on the accounting side, making sure that money that gets donated for missions, A, that the donor gets credit for making a donation to missions, and B, that goes into the missions fund and stays there until you spend it on something missions related. And so this is actually a pretty good list here now that we've added the youth fund, and I would say we are ready to go. So we have now made a backup, and we've got our list of contribution funds ready, and so we are going to restart accounting. So you do that up here. You go to File, Preferences, and then Accounting Setup, which is right here. And this is actually not set up presently, but I've already didn't have this staged properly, clearly. But once you've got it reset with the Restart Accounting button in the accounting setup, then you go to Set Up Accounting, and it takes you into the main event. And so when you go to Accounting and then Set Up Accounting, or when you're kicked into this process after clicking the Restart button, it goes in here. It goes into this nice multi-step process where it has you hit Next a bunch of times as you go through and asks you a bunch of questions as you go. These first few steps on screen are just words, and they are really the same things I've been telling you. These are all good directions. If you read them, you'll be well informed, but you're not actually expected to read all these. Feel free to just hit Next until you get to the first part where it asks you for something real, which is, when are we starting? It asks us here, first month of your accounting year. That's going to be January, and we're starting January. If your church were on a fiscal year, that'd be A-okay. You just tell it, you're starting as of September or as of April or whenever your fiscal year starts, and it'll divide the reports like that. You can always change that later, but by far the most common setup is this one. First month of the year is January. First month you're doing it is January 2026. Boop. It talks more about current assets. This is all the same stuff we've already covered here. And then it asks you about your main checking account. Okay, I have a piece of particular advice at this point, which is, say you're with Bank of America. You should call this account Bank of America Checking. If you have more than one checking account with Bank of America, you should start, abbreviating, BOA Checking 1234, where that's like the last four of the account number. But my general advice is you should always have the name of the financial institution as part of the name of the thing. Don't call this general checking. Don't call this general fund. Call it name of financial institution checking. So if you're with SunTrust, it's SunTrust Checking. And if you've got two checking accounts with SunTrust, then it's SunTrust Checking 4567, where that's the last four of the real life account number. Our goal here when we're naming assets is to make it very clear to anyone reading this what real life account we're talking about. That's why you would never type in general fund or general checking at this point, because someone reading that doesn't know where you keep your general checking or which of your bank accounts is the one you call general. But SunTrust Checking or SunTrust Checking and the last four digits is unambiguously the thing, the real life account. So you want to be careful with that, name things very consistently. Don't be vague, be specific. And here's where we're entering in a list of starting balances and outstanding items. And this part's a little tricky. So say hypothetically, you had gotten from your bank, SunTrust, say you had gotten a statement as of the end of 2025 that said you had $1,000 in it. And it's a real true fact, you had $1,000 in your bank account, right? So that alone, this would be totally fine on its own. If you had $1,000 in there and there were no outstanding items, this alone would be correct. But say you happen to know, like on Christmas Day, 12/25 of 2025, you wrote someone a $50 check, and they didn't cash it by the end of the year because who would? It's Christmas. And so what we'd need here is this. Check this out. So we go 12/25 of 25. The check is going to be check number, 1, 2, 3, 4, 5. Who cares? where we wrote it to John Smith for $50. And then we go up here and adjust this. This balance is no longer going to be the one right off the statement. It's going to be statement balance minus outstanding items. So we got this right here. And so if you had $1,000 on your end of year bank statement, but you knew there was a $50 outstanding check still, you would book it like this. The balance would be $950, and you'd record the specific reason why that's lower than the statement amount, or different than the statement amount. And so in real life, you might have a bunch of these. Like, say this check was written to Jane Jones for $25 a few days prior, and so now it would be $925. And PowerChurch does not do this math for you. To be clear, you got to know this stuff. You've got to put in your balance that is like a book balance, an adjusted balance. If you keep a good paper check register, this balance right here would be the balance at the bottom of your check register as of the end of 2025. If you don't keep a paper check register, then it's the balance from your bank statement plus or minus any outstanding items. And so you might also, I also mentioned you might have, like in practical terms, you might have a single outstanding deposit as of the end of the year. Like in real life, the last Sunday of the year was 12/28, right? And so say you had received all of that money, say you received all this money, deposit, and hadn't made it to the bank in time. Contributions. And so this one is going to be a deposit, and say it's for, gosh, I don't know, $200, right? And so this would be like this. We do up to $11.25. And so the real life situation is that there's $1,000 in the bank account. The bank statement says $1,000, and it's true. But the numbers we're putting in here are taking into account those things we know that the bank doesn't know as of the end of the year, like which items you wrote in late 2025 that are going to be on a bank statement in 2026. And so that's the main thing here is we need to know which items are outstanding as of the beginning of the year, like which late 2025 items are going to be clearing in 2026. We list them here, and we put in a bank balance that takes them into account. A bank balance here that is the statement balance, the balance from the bank statement, minus any outstanding checks plus any outstanding deposits. That's our balance we put here. Okay. And so then you hit next, and it asks you, do you have any other checking accounts? And let's just say we do. So I just set up a SunTrust one. So say I'm going to be with Wells Fargo checking, and we're just going to set up another one of these. Let's say not a lot happens to it. It's just got $500 in it, no outstanding items. But boom, next. And if you had any other checking accounts, you'd put them in here. Like anything that is literally a checking account, you do at this point. Then it asks about savings and money market accounts. Savings and money market accounts do not have outstanding items, generally speaking. It would be weird if they did. And so you just call it something like Bank of America Savings, unless you had more than one of those, in which case you'd be more specific, and we'd say, well, this has $5,000 in it, and that's it. Usually savings and money market accounts do not have outstanding items because of the kind of thing they are, like not a lot happens to them. Likewise, cash on hand, if you physically keep like folding green paper money, you should know how much. You treat your cash on hand just like you would treat a checking account, basically. It's an asset that's got dollars in it, and you would add that in. We just call it, petty cash, and say there's $100 in petty cash. Good to know, and if you ever pay someone out of that petty cash, then you can record that right into your books and know just what happened. Then any investment accounts. This includes CDs. That's the single most common thing. And so say we have Bank of America CD, and you bought a $1,200 CD. You'd put that in. And then if you have, and also any other investment accounts, if you have a stock account or anything like that, that's where this would go. The balance can just be the balance as of the last statement that you got for the year. And for things like this, you don't need to be updating them every month. You can just update them every quarter or every year, especially if only boring things happen to them, like with CDs. But so far we've gathered all of our information and we've restarted accounting. and we're just asking about assets so far. So far we've gone through and set up our main checking and all of its outstanding items. We've set up a second checking account. We've set up a savings account. We've set up this church's petty cash, which you may or may not have, and we've set up an investment account. There's also places here. The next step is fixed assets. If you're real motivated and want to show the value of like building, land, vehicles, equipment, furniture type stuff, you can. It's optional. That if one of your goals from above is you've got to show the value of all the church assets, there's a place to put that in. Land, building, vehicles, all that stuff. You'd put in the purchase price of them. And if there's been any depreciation, you would put in the depreciation. This part is all optional. That this is, if you've got values for your various fixed assets that you can put them in. Otherwise, you can just hit next to this and leave it all blank. You can go back and do it later quite easily. Fixed assets are optional in a way that the checking account is not. And then there's a section for other assets. This is for oddball stuff. In particular, someone had a question about PayPal, Venmo type accounts. This is where those would go. You don't set them up like their checking accounts. You click through a few more steps and put them in as other assets. All right, and so that's the first section. So we've gathered our information, restarted, and we've gone through assets, including book balances and outstanding checks for all of our accounts. Next up is liabilities. It's going to ask us about current liabilities, and that's all the same stuff we talked about before. Starting with the current stuff. Federal and state taxes. If you have an employee, even one employee you have a W-2 for, you probably owe some money on federal taxes as the year turns over. The good news is we know how much. We always know how much. Like, you almost certainly paid the government sometime in mid-January for the taxes. The amount you paid them in mid-January, that's the starting balance you put in here for the start of the year. That you just get that, right off the tax documentation. If you were doing this and didn't know that, or you were behind on your taxes, the answer might be trickier. But for almost everyone, the answer here is, it's whatever amount it said on your 941. It's the amount you paid in early January is the amount you owed at the beginning of January, and you just put in that number there. Most of these other ones here are other things you might withhold from an employee paycheck. Like if you're holding out any of these kinds of insurance or retirement, you'd put in like how much had come out of people's paychecks but not yet gone to the retirement or insurance company. If you don't do this, you just leave these as zero. Likewise, wage garnishment, if you have anybody who's getting a slice taken out of their paycheck, you would need to know how much has been sliced off but not yet sent to the government. The only other interesting stuff here is building use deposits. Like if you rent out the fellowship hall for weddings and hold a deposit to make sure the wedding party doesn't trash the place, any deposit you might need to pay back to them, you'd put that in here. That if that applies to you, you know it. You're always holding deposits and paying them back, but there's a place to put that. And then there's long-term liabilities, things like a car loan or a mortgage. Where if you have such a thing, we would say, I'd be more specific. I'd call it, Wells Fargo car loan, I suppose, if I were doing this in real life. Unless I had more than one, in which case I'd be even more specific. And let's just say we owe $5,600 on a church van as of the start of the year. We'd do that. And then we'd do, the church mortgage. If we, say we owe, still $180,000 on the church mortgage, we'd put that in as well. Actually don't want a mortgage on this one, but you'd put in any long-term liabilities you have, any debt that you are paying down over a period of time, long-term, everything where you just coincidentally owe some money right now, but you're going to be paying it out soon, that's current liabilities, like federal taxes and other payroll type stuff. If you don't have any W-2 employees and you don't have a credit card and you don't have a mortgage, then you don't have any liabilities. Many churches don't. But if you do have a credit card, even if you pay it off every month, you've got to put in, the church Visa card. It's super important. Use the last 4 digits, call it something specific, and record how much you owe as of the end of the year, even if it's zero. Because that's an important piece of infrastructure you'll need to track spending on that card later, is this liability for the church Visa card. And then, yeah, short-term and long-term liabilities. And then we get to the next fun part where it shows us our sources of contribution income. So remember, back when we were doing our preliminary stuff, we made a backup and then we fixed up our list of contribution funds. And then it shows them to us here. These are all of the different contribution funds from that side of the program. And the setup process asks us for each one, what do we want to do with it? For something like tithes and offerings, the answer is unrestricted. Unrestricted is like money that is just for the church. The donor does not have anything particular in mind. They are just giving the church money because they're donating money to the church. Tithes, offerings, general offering, loose cash, anything where they wouldn't bother writing anything in the memo field of a check. That's unrestricted. Most of these other ones, though, are what we will call temporarily restricted. Temporarily restricted is a synonym for designated or just restricted. It is money that people are giving you for something the church does with the idea that you spend their money only on that one thing. Like if people are donating to missions in particular, the church can spend that on anything missions related. You can't spend it on anything, but as long as it's under the umbrella of missions, we're good to go. This balance here, Mexico missions, is a little bit smaller of an umbrella. Anything that you have to do with missions that are in Mexico in particular. Not just any missions. We couldn't use this on a Guatemala mission. It would have to be Mexico. Likewise, the building fund, the memorial fund, the youth fund are all typical temporarily restricted items where the money piles up as people donate to it. Money, if people donate to these things and you don't spend it, the money just piles up and up and up until you spend it on that thing. And that's what restricted is. These terms all mean the same thing. Restricted, temporarily restricted, designated. As far as I'm concerned, they're synonyms. It just means this is money a donor is giving to the church with some idea in mind that the church spend it on something in particular. That could be something as general as missions, or it could be something as specific as a porch renovation project. Whatever it is people really donate money to in your church, you'll set up contribution funds for it, and then when you get to this point, sort them into categories. And so these are all temporarily restricted, which is just, again, designated or restricted are the terms your church might use for those. And then these ones here, where they come in with the name of a specific other organization on them. These are something special. They're pass-through. So things that are pass-through, it's not just that you're only holding on to it for a little bit of time. The thing that makes a pass-through is that it comes in with someone else's name on it. That if people are donating money with the name of some other organization on it or the name of some other person on it, and the church is just takes the money gathered and sends it to wherever it's going, that's a pass-through. And so even money the church, even if you had like a very active missions fund, that every time you get money for the missions fund, you pay it out right away, that's not a pass-through because the church still has discretion on how to do it. It could be anything missions related. The thing that makes something a pass-through is that it's for some specific person or organization. The single most common pass-throughs are in Baptist churches, Lottie Moon and Annie Armstrong. But a lot of other denominations also have like denominational mission organizations that it's very common to get donations for that missions organization in particular that you send out to that missions organization in particular. That's a pass-through. The other common pass-through, like the other single most common pass-through other than missions orgs, is like if the church supports a local food bank but doesn't own the food bank or run the food bank itself but is regularly getting those donations. Those are pass-through because you passing them right on through to that other nonprofit. And so here we are in the accounting setup process. So after you've done assets, including book balances and outstanding checks for your bank accounts and any other accounts the church has, then you do liabilities, including tax liabilities, credit card liabilities, and mortgage. And then it asks you about your contribution income, and you sort your contribution funds into unrestricted, temporarily restricted, and pass-through. There's also a fourth option, permanently restricted. That's for if your church has an endowment, like a university would often have, where you're not allowed to spend the principal and it just lives in an investment account somewhere and you're never allowed to spend it, except maybe the interest. That's permanently restricted. Most churches don't have any of those. If you have an endowment, that's permanently restricted. If not, don't worry about it. Everything is temporary. All right, and so then anything you set up as restricted here, there's a place to put in a starting balance. So like say as of the beginning of the year, there was $200 set aside for missions in general and $47 for Mexico missions, and the building fund, we're saving up for a big project, so there's $12,000 in there. And the youth fund, let's give the youth fund $50. All right. And so you would need to know about these. This is the one I was talking about before, where you'll want to go and talk to whoever is in charge of this area and make sure that you're not, from their perspective, pulling their money out from underneath them. You want to make sure that these are the balances people expect to see, and that when you put out your new balance sheet for the first time, people's immediate reaction is, hey, you want to avoid the reaction, hey, what happened to all my money? You want these numbers to be the numbers people expect to see for the folks who are in charge of these different areas. And once you're set up in January, they'll go up and down on their own. But the starting point, very important. Permanently restricted, we haven't got any of those. And any pass-throughs. Pass-throughs, generally, they do not have a starting balance because you send the money out as soon as you get it. If by some chance you'd gotten some money on that last Sunday of the year, you might owe some money on a pass-through, but usually you don't. Say there was $50 that came in that last Sunday of the year, you still owed to ABC missions, you'd put it in. By far the more common situation in real life is that pass-throughs start at zero because the money goes out as soon as it comes in. And then we're here at the finishing step. All right, and so this is a screen here. After I hit finish, we're actually not done. It takes us to this screen, edit and finish accounting setup, where we can do a bunch of cool stuff. Immediately, we can take a look at our balance sheet. We can preview what that'll look like. And especially if you've never seen a good balance sheet before, this is super simple and super clear compared to what you might have had before. It just lists each individual asset the church has got. They're sorted into these nice categories. It gives a total of your assets. Very literal, this first section is just where the money is literally at. And then any liabilities, and then any restricted balances. I've been careless here, and I accidentally put in $12,000 for the building fund. This church doesn't actually have $12,000, and so they're a little bit oversubscribed. I'm going to go back and give them an extra $10,000 here real quick. I really feel like they deserve it. All right, and now if we go back to our balance sheet, the change I made is reflected immediately in this. That now we see there's more money here and more money in the general fund and so on. This step here, this edit and finish accounting setup, this is your last chance to make changes. This is a good stopping point for a day's work. If you were to hit exit accounting setup at this point, it asks if you want to save, and you can tell it yes and pick up again from later. And when you hit complete the accounting setup, it really closes you all the way out, and you're off to the races, and your next stop is to start entering in January checks. But you can work these buttons on the left here and just go through and put in any changes. If you did anything wrong the first time, you can go and fix it here. And especially if you have a way your expenses ought to be, you can make changes to the expenses section of the chart of accounts right from here. If you have something in particular, you like, the most common thing in the world is we haven't got a minister of music, so we don't need all these accounts. You can just go delete, 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 and now there's no minister of music section. You can do all this stuff after the initial accounting setup process too, but if you have a particular vision for your expense section, this is a quick way to go through, and you can just delete all the stuff you don't want, add the stuff you do. And this is all stuff, nuts and bolts, we can help with over the phone if you call tech support. I know I'm kind of breezing through this, and when you actually do it for real, you'll want to stop and double check every step. But that is what we're talking about. When we say restarting accounting, that's what we're talking about. You'd make a backup, gather a set of information, and then go through that process where you hit next about 40 times and put in all those starting balances. And when you're done, you hit complete the accounting setup, and you're just in a working PowerChurch with accounting setup, and you're good to go entering in your accounts payable and so on for the year 2026. All right, and that is 45 minutes. And I know I just kind of went quite fast through all that to cover it, but we've got time for 15 minutes of Q&A, and if anyone has any questions or stuff that they want me to elaborate on, then I will answer those questions. I'm going to take a look through the chat. Okay. Let's see. Okay, institutional accounts with services like PayPal. Yes, that should be set up as an other asset. If it's a thing that holds money in it, set it up as an other asset. Okay, let's see. We've never closed a month or year since 2017. If I close a year, can I remove items of the chart of accounts no longer used, etc.? Sort of. Okay, so if you're talking about you want to keep your existing accounting system, not restart, but get yourself the freedom to delete all the stuff you are not presently allowed to, it's two steps. One is you would close the month. You'd go through and get everything squared away, close months through 2021. But that wouldn't let you delete all the stuff with history. There's a step you would do. You'd go to. Let me flip back over to my screen here so I can actually show you what it looks like on screen. There's a button to delete old data. Screen. And so here in PowerChurch, here in the demo, you would go to Fund Accounting down to Setup and then delete old data.
Thomas, can you pull up your screen? It's not shown on the...
Oh, it's not showing up? Okay, hang on. Let me try that again. More. It's thinking about it. Well, okay, in the interest of not troubleshooting, I'm going to just tell you the answer. It's Fund Accounting down to Setup and then delete old data. And you can have it delete all of the specific data prior to a particular point. That it would let you clear out the specific history before that, and then you could delete all of the specific history from there. It's a multi-step thing, but it's very doable. That if you wanted to clean out your accounting without restarting, it's doable, but there's some extra steps. So closing year alone would not let you do that, but you would close a year and do the delete old data process, and that would free you up to delete old vendors, contributions, accounts, and so on. Almost certainly a tech support call, but it's a quick one. We could help you get started. All right, next question. Is there an amount of time where you've carried an outstanding check where you should void it out? That's a church policy one. The church should have a policy on stale checks, but whatever you pick, you can then implement that in PowerChurch. Just after something's been stale for a few months, then you void it. But there's not like a rule. You just would pick a time horizon and say, well, if you haven't cashed it for 4 months, we're going to put a stop payment on it and do that. But it could just as easily be 6 months or 8 months or 2 years or whatever the policy is your church has got. Sherry asks, can the bank name be changed after the startup? Yes, all this stuff can be renamed after the startup. A word of warning. If you get a new bank account, don't rename the old bank account to be the new one. Make a new asset for the new bank account to keep a nice clean transition. But mechanically, yeah, you can rename any of these accounts after the fact, no problem. Next question, if you're starting in June, can you import lump sum totals for prior months? Sort of. You can enter lump sum totals for January through May in total to get good year-to-date reports, but you can't put in January, then February, then March, and so on with the lump sum thing. If you needed lump sum amounts without doing the details of each of those months, you could kind of fake it. You could do a great big lump sum transaction for January, then for February, then for March, and so on. But that gets tricky when you get up to the present day because you would need to know what was outstanding at the end of May so you can have that be separate. So the answer is kinda. Generally, if you're doing the starting mid-year, putting in lump sums, you're putting in lump sums for the whole year so far instead of for each individual month. If it's important to have it for each individual month without putting in each individual check, that's doable, but a small project. Let's see, memorial donations. Yeah, memorial donations would pass through contributions. In the example that I had set up, I had memorials as a restricted fund, like missions or building would be. That's not the case in some churches. Some churches, memorial donations, you want to know how much came in memory of a particular person, but it's not like it's for anything in particular. So depending on how your church handles memorials, They definitely go through contributions, but you might need separate memorial funds for different purposes, or you might have it be just one unrestricted one. It depends on how your church handles memorials and what people mean when they donate to a memorial fund. Let's see. Is there a reason to do an accounting restart versus just closing out a prior month? Yeah, you'd restart accounting if your accounting is really bad. That if in general you've been having trouble getting good reports, if you find yourself saying, well, let's not run the balance sheet because everything on there is wrong anyway. If you can't reconcile because things aren't coming out right, and it's just a big tangle, especially a big tangle that you inherited that nobody knows how to run it anymore, that's when you'd restart. Just closing out a prior month is something you would do if everything were going great and you weren't considering restarting. See, next question. Can you change a posted journal entry? Sort of. You're stuck with it to a certain extent, but there's a button to correct it. You'd go to View Posted Transactions and click Reverse and Correct. That puts in a reversing entry, canceling out the bad one, and then a new replacement entry that is the way you want it to be. See, Angie, PowerChurch's cash basis. How do I record bills that require payments at a later date? You can you record that in accounts payable. You put in a due date in the future, and then when you go through to, if you're paying bills like by printing checks out, you can choose which ones you're printing out onto a check right there. If you're doing e-transfers or other EFT type things, you put that in just as an accounts payable manual check. That you choose, you just put in the number. If there's an associated e-check number or e-transfer number, you put that in as though it were the check number. And the 1099 system, that's if you're using the accounts payable part of PowerChurch, any vendor you mark as needing a 1099, PowerChurch spits out a 1099 form at the end of the year. You'd either need to be doing e-filing or buy the kit with the blank paper 1099s to do that. But generally speaking, if you're using PowerChurch to record all of your checks throughout the year, making it spit out 1099s at the end of the year is no big deal. Voided checks, yeah, in general, you should enter in every check that you void for whatever reason, even if you just like your dog chews it up or something. There's a way to enter that in as a piece of wasted check stock. Well, shoot, I got a minute. Let me show you that right now. Let me see if I can share my screen. There we go. All right, so if you were, let's see, what was that question? Right, if you're recording a piece of wasted check stock, you go to accounts payable, maintain manual checks. This is just the same place where you'd go to record an EFT or a real check you wrote with a pen or anything. But say my dog ate check number 1234. So I go in here and I just type in pay to the order of void. Hit tab and it blanks out the rest of it, and I hit save. And you wind up with this entry here, which is just like a do nothing entry. The whole point of it is to record that check 1234 didn't get lost. We know what happened to it. That's optional. Nothing bad happens if you don't put that in. But if you want a good check register that lists every individual check, that's how you do it. Okay, how are restricted contributions presented on the income statement? Now that's a good question. So the answer is, like all the other contributions, but in their own section. So I'm just going to pull an income and expense statement. I'm going to have this include zero balance accounts just because right now there's nothing in this. We just started it. But take a look here at the income and expense statement. So in the income section, it has anything we marked as unrestricted goes in its own section here. That's just tithes and offerings. Anything we marked as restricted, it's still under the heading of income, still under the heading of contribution income, but it's out in its own separate thing under temporarily restricted. And we haven't gotten to this and won't on this call, but when it's time to spend restricted money, like when you're releasing funds and drawing down a missions fund or a youth fund, that also shows up on the income and expense statement in this release section, where you'll see negative numbers here for how much has been drawn out of that during a particular period. And that's beyond what we can talk about right now about the setup, but that's how that shows up. Let's see. Yeah, for Canadians who do something similar to a 1099, instead of running the 1099 itself, you just run a report that gives you totals. In the list of accounts payable reports here, you would run something like a vendor activity summary, or even a 1099 vendor list. You can just use the thing designed for Americans, and it gives you a list of all the vendors and their amounts that you can just use to fill out forms. Straightforward enough. And you'll find a lot of stuff for Canadians is like that, where like the Canadian equivalent, you just use the generic report from PowerChurch to get the raw material you need for the Canadian tax forms. Let's see. Paul asks about starting accounting for 2027. Okay, so if you wanted to keep going through 2026 the way you've got it, but also restart in 2027, there's not a super easy way to do that. What you do is you'd make a backup of how things are right now, your current run of things. You do the various restarting tasks as of August, get that all set up the way you want, and then make a backup of that somewhere else, restore your original backup, go back to working in the old set of data. It's tricky. I don't necessarily recommend doing it, but if you do it, call us first and we'll help you with the logistics of it. But PowerChurch only keeps one accounting system in it at a time. And so if you're restarting accounting, that means necessarily you're getting rid of your old accounting. All right, let's see. All right, and then we have, next question is, are accounts receivable, accounts payable part of the full account statement? Are they conceptually different? Generally, so like the fellow said before, this is a cash basis accounting system. And so generally, accounts payable just shows up as expenses when you do it, and accounts receivable just shows up as income when you get it. That while you can do business style accrual accounting in PowerChurch, I mean, it's a standard general ledger. You can set up assets for accrued income and expense, or liabilities for accrued expenses if you want to, but you're managing it by hand. The default thing in PowerChurch is accounts payable is just expenses that hit in the month they happened. Accounts receivable and contributions are income that hit in the month they happened. And all of the things that make running accrued expenses for a business more complicated just don't apply, which is great. Great. Let me check the old Q&A, see if I've missed anything. Okay, so Brenda asks, are you saying you can clean up your existing accounting by backing it up and resetting? The answer to that is sort of. If you restart your accounting, you're cutting loose your history. You're losing your history. You're losing your chart of accounts. That's all going away. So you're not, what we're talking about on this call, the accounting setup process and the things that come after it, is you would only do that if your existing accounting system was basically no good. Or it would definitely be a lot more work than what we've talked about to rehabilitate it. And that's a judgment call every time. The analogy to like renovating a historical building is a pretty tight one. That a lot of times, like, there's valuable details in there. We really would like to know the specifics of all this, all these checks that got written, even though your predecessor and your predecessor's predecessor never got their bank to balance and put in a bunch of bad stuff too. You know, that history is valuable. And so you have to weigh the considerations. Do we want to restart accounting at the price of losing all that history? But the thing you get for that price is accounting that doesn't have any problems in it. And so that's always a judgment call. No matter how messed up your accounting is, it is in principle possible to fix it. But depending on how far back you need it to be good, and depending on how messed up it is, it might wind up being that it's like, you know, a work's week worth of effort to get it to the current standard, whereas it's a work day's worth of effort to restart it and get started fresh. And so it's always a judgment call as to whether you want to restart or not. It's a question of what are the merits of your existing accounting system. All right. Let's see. Any other questions for right now? All right, it looks like no, but you can always reach us. We're available via the normal 800 number for PowerChurch Tech Support. And we're doing another one of these next month that is going to be about bank reconciliation. And that one especially is not going to be about starting fresh. That one's going to be about however your reconciliation has been, here's how we're going to make it right. And so that's going to be our seminar next month, which is going to be a lot of fun.
Yeah, thanks everyone. Thanks for joining us. Thomas, great job. I agree with all the chat saying you did a great job clearly explaining everything. And again, we'll post a recording to this on our YouTube page, and everyone that registered will get an email with links to the recording and the slides and everything like that. And we'll hopefully see you again next week or next month. Thank you all. Have a
Cheers.
great day.